The stock market looks to be on the edge of collapse, more so than a Jenga tower with one block left in it. What can we expect to see going into this market next week? Are we expecting to see a large sell-off, or are we expecting to see this climb back up to normal levels? So in this video, we are going to be looking at 6 stocks. These include Palantir, Supermicro, NVDA, SOFI, HIMS and Barber. So to start off, we're going to be looking here at Palantir. Don't want to waste your time, so let's get straight into this. On the MACD indicator here, we can see that we are still in a long position. However, we are looking as if this is going to close relatively soon. It could be within the next 1 to 2 weeks' time. One bearish indicator for Palantir is it has now fallen below the 50-day moving average. This was something in which I said might happen early next week, and it has, last week, sorry, and it has. And we can expect to see there being a lot of selling pressure now that it has finally gone under this, as this is one of the first times this has happened in around 9 months. So we are expecting to see a lot of selling pressure, especially now the US government has announced an 8% cut to defense spending, and Alex Karp, the CEO, is selling $1 billion worth of shares. We can see here for Palantir, they currently sit at a PE of 446 and an earnings per share of only 0.19. I have their intrinsic value on a mode basis to be set at 8.83 and on the discounted free cash flow analysis for 9 years growth at 83. So in my system, Palantir is massively overvalued, which if you're thinking that my system might be very bearish, then just keep watching, because it's actually quite a bullish system, as you will see for the rest of the stocks in this video. We can see here on my breakout system, we can see Palantir is rated at 99, suggesting that they are massively in decline, which is very obvious, and they are giving us a score of 8.40, which just suggests that this is a stock to be shorting at the moment. With the general consensus from analysts being to hold this stock, I do think long term this stock is going to be fine, but I think this is definitely the end for the hype train of Palantir. It's been going up for, I think, around 9 months. You could have had a child by the time that Palantir has finally started to fall. So it is a brilliant stock, but I do think now this could be the end. But we could also see a lot of buying pressure, but according to these indicators, is very unlikely. So now we're going to be taking a look at Supermicro. This is a stock in which I had been bullish on very much so in the past, and my system is still saying that this stock is a buy, with the intrinsic value mode coming in at $129 and the discounted free cash flow analysis coming in at $453 on a 9-year growth basis. In my opinion, this stock is still massively undervalued and has a lot of room to grow, but of course I called this, I think it was way back here, and of course we saw this massive spike up in their stock price. So if you did get in, you did very well. We can see here on the trend lines that they are above all of the trend lines apart from the 200-day moving average. So it suggests that there is still potential for growth, but in my personal opinion, I think we're going to see a bit of sideways action in this stock now, or we could see it decline as short-term traders are taking their profits from this stock. If we do look on the MACD indicator here, we can see that we are in a long position on the day chart, and if we go to a 15-minute chart, we can see that we are actually in a short position, with this stock falling down quite badly last week since its peak the week before, I think on Wednesday. So we can see that this stock does seem to be in decline, and it has momentum going against it at the moment. With on the 15-minute chart, all of the moving averages are now above the stock price, which is a bad indicator, but as long as they stay above on the day chart, I think this stock could have a chance at rebounding, but I'm not entirely sure if that will last with the momentum going against it at the moment. So when we look on my breakout system here, we can see that they are now massively down in 41st. They were actually in the top 3 last week, and now they're doing really bad, with them giving a score of 1.57, which indicates that we are going to see a bit more selling pressure within this stock. So in my opinion, I think we're going to see a bit of a turbulent week, more turbulent than my Wi-Fi in an important Teams call, but we can expect to see the stock long-term grow back. I think, of course, it is a very skeptical stock, with them having earning releases being fabricated in the past. People are hesitant to invest into this stock, and I think that's why we're seeing such a large sell-off now, is because investors are a bit worried about the integrity of this stock. And of course, when you have a lot of swing traders and day traders, after a large spike like this, we are obviously expecting to see large selling pressure, much like with one of our latest stocks, HIMS. So now we're going to move on to NVIDIA. I have their intrinsic value mode to be set at 187, and I do not have a discounted free cash flow for this stock currently. That is something in which I am looking into. However, we can see that just according to this intrinsic value, which was carried out before the Q4 report came out, we can see that this stock still has a lot of intrinsic growth still yet to come. Speaking of their Q4 report, this was a very good Q4 with only their gaming services being down. But it does seem now that the market doesn't really care about gaming anymore. It's something in which has consistently fallen for a while now, and it's a bit of a dead industry, and it isn't really the one that paid the bills anyway. So looking into data centers and AI, this stock seems to be pushing this really well, and it is giving it a very bullish outlook. But despite this, we have seen the price just fall since their earnings report, which is what happened in Q3 as well, if you remember. We are seeing a lot of sideways action in NVIDIA now, and I can't say that as a bad thing, as this is when all of the sellers that want to get out do get out, and I do think long-term NVIDIA is still a great company to hold, and I think it is still quite cheap at this price. So if you were looking to buy into NVIDIA, this could be a perfect buying opportunity for long-term growth. I think short-term, we're still going to see a lot of sideways action, as here we can see on the daily chart on the moving averages. We are below most of them now, and if we look to the MACD indicator, we can see that we have entered into a short position. If we look on a 15-minute chart here, we can see it is going to be exactly the same story with this massive selling pressure earlier on this week. And of course, with the moving averages, we are expecting to see the exact same thing. So now if we look on my breakout system, we can see NVIDIA gets a score of minus 3.4, suggesting that we can expect to see more sell-off pressure. And we have an overall rating based off of the rest of the shares here that it is rated at 85, which is higher than NVIDIA. So it is Palantir, sorry. So it is actually performing a bit better, but that's pretty obvious with the fact that Palantir is falling down the stairs faster than an old woman at the moment. I think that NVIDIA trading at a PE of 42.49 is actually a bargain of a price to be getting into this stock. I think it's quite unfair how this stock is seeing a lot of selling pressure, much like our next stock, SOFI. But I think if you were buying into this stock, this could be a brilliant time to. So now speaking of our next stock, we have SOFI. This stock in my mind is just getting absolutely beaten up. It's getting bullied in my mind, and I don't think it's fair. I have an intrinsic value to be set at $104. I know that might seem outrageous and stupid, but you gotta think earlier on in this video I said Palantir was set at $8.83, so you can't really say that this is a very bullish formula. We can see that on a discounted free cash flow. I haven't actually done that, so we can't see anything, but on the daily 15-minute chart here on the moving averages, we can see that we are bang on nearly all of them apart from the 200-day moving average, and on the MACD indicator we are in a short position. However, this looks like it might enter into a long position at the start of next week. SOFI is very similar to NVIDIA in the fact that it has just seen a lot of sideways action as of recently, and I think it's probably a good thing, but of course it's not really good if you're holding this stock. It is looking as if it's forming somewhat of a head and shoulders, if you believe all of that. It could be, but I don't think it is. I think we might see a bit more selling pressure, but I think long term, especially by the end of this year, we're expecting SOFI to go up quite significantly. My guess would be at least to $30, but I have it, so it should go up to around the $100 mark. But obviously that would be kind of ridiculous, but you never know. It could definitely happen with this stock. On the moving averages, it is above the 200-day and the 70 and the 100-day moving averages, but it is below the rest of them. I currently have SOFI ranked at 67th on the system, with it looking to be as if it's going sideways, of course, with the score being at minus 1.55, suggesting that we are going to see a bit more selling pressure, but it's not a massive amount, and it could definitely rebound within the next month. I do think it is only a matter of time before we see SOFI climb back up, with them having just outrageously good earning reports and a very good brand image at this point. I think that SOFI is going to do exceptionally well over the course of the next year. So now we're going to be looking at HIMS. This is a stock in which has also been beaten down quite badly. However, this is again due to the fact that short-term traders managed to leverage this momentum and have now obviously gotten out of it. I have an intrinsic value set at only $50, so pretty much where we're set at for this year's growth, but on a long-term 9-year growth, I have it set at $315. So it does seem that this stock does seem to be relatively fairly valued now, especially for this year's growth. But if we look on the moving averages here, we can see that we are above all of them, suggesting there could be a bit more buying pressure. However, I'm not entirely sure if we will see that. Looking on the MACD indicator here, we can see that we are well into a long position. However, it does look as if we might see this start to close off within the next couple of weeks. On a 15-minute chart, we can see pretty much the exact same story, with us now entering into a long position, on the MACD indicator, suggesting that we could see a lot of buying pressure. However, if we see here, we can see that that is a very big engulfing bearish candle, suggesting that the price should be going down within the next week. But despite this, we can see here that the stock was bought back relatively quickly, which is quite a good sign for HIMS, but it's hard to say. This stock is very choppy at the moment. It's definitely one in which, if you don't like volatility, I would definitely recommend staying out of. It's mostly up to very good earnings reports and its Super Bowl commercial. However, now the Ozempic drug, which Novo Nordisk provide, is no longer in shortage. However, there is still a lot of speculation on the safety of that drug and if it is something which should be getting used by the American public. I'm not sure if it's actually in the EU. I'm not entirely sure, but it's something that I wouldn't touch with a long stick. Not like I need to, because I'm massive. I'm joking. I'm not massive. Why am I saying that? Anyway, looking here, we can see that this stock is looking to be very volatile. If we look here on my breakout system, we can see HIMS is ranked at number 7, and it is giving us a breakout score of 6.08, which suggests that this stock is actually still in positive metrics for growth, with it being above the 50-day moving average. The volume is looking good, the RSI is looking good, and the ATR is looking good as well. With it being at a PE of 85, I think this stock is still a relatively good buy for long term, but for this year's growth, I can't say that this is a good stock. But if you do hold HIMS, it's definitely something to carry on holding, as it is a very good stock. Of course, it is a brilliant company, and their earnings reports are absolutely amazing. So now we are going to be looking at Alibaba. This is also a stock in which I said should absolutely climb up this year, and it absolutely has. I've said absolutely way too many times. We are definitely in a long position here on the MACD daily indicator, and looking at the moving averages, I expect to be above all of them, which we are, which is perfect. And we can see here that their earnings report was really, really good, with them now as well saying that they are bringing out their own AI after the whole DeepSeek fiasco. So I have a intrinsic value set at $118 for this year's growth. So it does seem to be the stock looks to be relatively fairly to overvalued at the moment, but on a discounted free cash flow analysis off of 9 years growth, this is kind of ridiculous. So get ready for this. I have a price to be set at $5,382. That is just based off of their discounted free cash flow, which we can see here. Their free cash flow is just absolutely outstanding, with it being relatively stable and somewhat increasing year over year. And if we look on the quarter chart here, we can see again it's just looking to be really, really strong. With Alibaba having only a PE ratio of 19.32 and an earnings per share of 6.86 at $132, it does look to be a fairly valued stock, and that is exactly where I have it with my intrinsic value. But I can't really recommend getting into this stock at the moment, purely just because I think it is at its peak for the year. But long term, if you're looking to hold this for a few years, intrinsically it should do really well. I don't think there's any reason to say that this stock won't do well over the next 9 years. But of course, with it being a Chinese stock, there's always geopolitics in which will play a role within this stock. On the 15-minute chart, we can see we are now in a short position, with this stock having a lot of volatility priced into it, and we are now below all of the moving averages, which doesn't look to be a very good thing for them. It could suggest that next week will be quite a bearish week. However, to counter this, they are actually ranked first on my breakout score. However, this will get updated early next week, I imagine, as their 1 day difference isn't looking very good and their volume is massively down compared to their average volume. One stock in which I do want to look into is this Gilead. I think I'm saying that right. It's just broken though since I clicked that. It is looking green on every single metric and its breakout score is looking really good. So it could be a really good stock to buy into. Let's just have a quick look. This stock is looking to be a brilliant stock for breakout potential, with it just looking as if it's going to be continuing to climb consistently with the moving averages looking so. And on the day chart, what can we see? Well, on the day chart, we can see here it is pretty much the exact same story. So this could be a brilliant stock to be buying into if you are a momentum trader. I do not have a intrinsic value for this stock or a discounted free cash flow. I haven't actually looked into this stock at all. And if we look on a Yahoo Finance here, what is the PE ratio? I'm imagining is high. Yeah, it's 300, which is quite high. So it could suggest that this isn't really a good stock to be buying into for momentum, but at the same time, with its growth being quite good on a 6-month basis, you can probably expect to see this carry on, or it could fall down like Meta did in the last couple of weeks, where they had a 3-month consecutive amount of growth and then they just had a massive sell-off. So I'm going to end this video here. I'm going to look into this stock. It could be something worth buying into. If not, I will not, of course. But I'm going to end this video here. If you have found this video useful in any sort of way, please do let me know in the comments. What are you doing with your stocks next week? Do you think this is going to be a bullish or bearish week? Let me know in the comments. With that being said, I will see you for the next video.